Well, friends, as you can see from my t-shirt, today was a red day for the markets. And it's a very interesting and funny day because you'll be wondering why the market turned red today. Because Brent crude eased a further $3 today at about 86. The US interest rates, the US dollar index, the Indian bond yields, and the rupee were all fairly stable. There was no cause for panic from anywhere. On the contrary, there was a sharp correction in tech related stocks, the AI tech related stocks, both in the NASDAQ like NVIDIA and in the Korean index like SM Hynix and Samsung. And in fact, all the Asian markets which are tech heavy ended in the red today. Korea, the worst of the lot. So a lot of things were in favor of having another good day after yesterday's good day. And one more good point which the market should have taken care is that FIs came back to buying after many days of selling. Yesterday, if you recollect, they had sold about 1,600 crores. Today, they bought 700 crores. And as is the DI habit, yesterday they bought 2,500 crores. Today, when the FIs became buyers, they reduced their buying. They bought about 2,300 crores today. Right now, count it: Brent crude easing, tech-related sell-off, and stable macroeconomic, and FII buying. All this should have pointed to a green market. Sad, but not true. Why? The Nifty was negative flattish. The mid cap index was also probably 8 basis points flattish. Small cap was down 22 basis points. Micro caps were down 1.3%. So if I've told you that FIs were buyers and DIs also buyers, then where does the blame lie for a red market day? Well, it lies in the hands of the NIDI. And after buying heavily yesterday, they sold heavily today. Because yesterday, if you recollect, I said 2,000 stocks went up and 900 stocks came down. Today was a mirror image. 900 stocks only went up and 2,000 stocks came down. Now, what caused this? I'm hesitating to use the word panic. I only think it's profit booking, right? Why do they do that? Why do they buy yesterday? And there were no triggers as such, right? So it's a very peculiar thing on which we probably need to understand a little better, but it fails me to explain this. As far as the FIS were concerned, well, the sell-off in the tech is normally meant a switch globally towards services, which is the alter ego of AI tech. So I think Accenture stocks have been also doing well there. And in India also, the FIS bought the IT stocks today. So IT was the top performer, 3.32% up today. There was no special news. I think maybe a Coforge result came, which was very good. That was it. So from that point of view, they were buying IT because whatever 700 crores was a net buying, and they sold off FMCG and banks, which are the other significant. FMCG sold off because Hindustan Lever's numbers showed a decline in profit and there was a sell-off. But I believe that is unjustified. I'll talk about the results later of Unilever. But if you notice, there was sector rotation, and so somewhat to extent you can explain the large caps flattishness to say FS bought something, sold something. DI has also participated on similar lines, right? But if you look at the fact that micro cap index was down 1.3% and look at the advanced decline ratio, which was 900 to 2000, it's clear that NIDI was booking profits. And what did they book profits in? Well, the banking segment across. Then they sold the metals, they sold FMCG, which is again both in the large cap and the mid cap probably. And they bought, what was bought today? Other than IT, which was a strong rally, there was realty, there was consumer durable, there's auto, which is exactly the same sectors that went up yesterday, which makes it all the more puzzling to understand the day today. The sectors which went up yesterday were the strong sectors which went up today were the same as today, but you saw the exact opposite of the advanced decline ratio. And mind you, the India VIX was flat, no change, 12.5. So clearly there was a lot of profit booking is why I've come to the answer that it's been profit booking which led to a red day. And so in that terms, right, it's very hard to predict what will happen in the next couple of days, because clearly FIIs are not making a strong call. 1,600 selling yesterday, 700 crores buying. DIs are just matching. So the market is just rotating and consolidating, and it's actually the NIDI participants who are driving how the market will perform. And it's very hard to predict and say this. And naturally, being in the midst of the earnings season, they're reacting very strongly. Like I said, Unilever. Let me talk about those. Now, Unilever's numbers, they were down profits. So the negative reaction was probably explained by that. But that was because of a one-off tax gain they had last time, which they've said that because of it there was a loss. Otherwise, their business subsidies were good. They said rural demand is growing well, urban demand, retail demand is growing well, and premiumization is also doing well. So they gave a very positive analyst con call, but despite that, the stock got hammered and FMCG index also got hammered. Again, hard to explain. Some of the other results for today, if you wanted to look at, was perhaps let me look. One or two results were there which were of interest. L&T. L&T gave a very strong result. They showed a very strong growth despite the fact they're a big business in the Gulf, and the Gulf has been obviously affected by the war. But despite that, they got very good orders, and well as their profits grew up. The other news from the earnings season was that Switzerland dropped heavily today because their EBITDA and EBITDA margins declined, and I don't think there was any other notable thing from. I'm sure there are a lot of results, but I just thought I'll focus on these. Some good news was there in terms of the industrial numbers. The IIP numbers came and they grew 7.3%, beating the market expectation of 6%. And I think this is the fastest growth in the industrial sector in the last 2 years. And this was led from manufacturing, capital goods, and infrastructure, right? Manufacturing output, in fact, rose 7.8%. Electricity, gas production increased 10.6%, which reflects very resilient domestic demand and higher industrial activity. So there was no cause to have a bad market day today. And I'm hoping that tomorrow the NIDI will come back and buy, and that Mr. Trump will not do something extraordinary tonight, and that Brent crude will remain soft, and hopefully we can hope for a better market day and a NIDI return to buying tomorrow. Thank you.